Good morning and welcome to today's webinar from East Capital Group, focused on the Nordic equity space as well as Nordic fixed income. My name is Marcus Rågmark. I'm a member of the sales team here at East Capital Group. Speaking of the Nordic region, it was a really stellar 2025, both for Nordic equities as well as for Nordic fixed income. On the equity side, Sweden and Finland in particular stood out with very strong returns of 44% and 57% respectively. This is in US dollar terms, outperforming significantly wider European indices. Nordic fixed income also had a strong year, both within the high yield and investment grade segments. With me today to discuss the Nordic small and mid-cap segment is Staffan Östlin, the portfolio manager of our recently launched Isperia Sweden Small Cap Fund, a fund focused on the Nordic small and mid-cap segment, which we launched in August last year. Welcome, Staffan.
Thank you.
Great to have you with me. So, despite a strong year overall, as I mentioned, Nordic small caps again lagged their larger cap peers last year, which extended the underperformance, which we've seen in recent years between small caps and large caps. Nevertheless, this has created an attractive entry point for many of these companies, and we see many analysts now voicing their optimism for 2026 and seeing it as the year that will mark the return of the small caps. So what's your own view of this recent underperformance, and do you see the same optimism for 2026?
Yeah, I mean, I would say that what we have seen is sort of a long hangover since 2021. 2020 and 2021, characterized by COVID, was a fantastic year for small caps, and there were a number of companies being listed. A lot of them were not really ready for a listing, I would say. They came into the market at very high valuations, and you had a lot of inflows into the small cap funds. So people were more or less forced to buy into stocks that they probably didn't really understand to 100%. We also got sort of high valuations. So I think that to some extent the Swedish and Nordic small cap markets were victims of their own success because money flooded in. And we have been through this now for 3-4 years, and I think that I'm sharing the optimism.
That's
really.
Great. Right. So a healthy correction in many ways, which has created this good opportunity which we see now.
Absolutely.
And last week you were in Copenhagen, I know, attending the SEB Nordic seminar, which is an annual gathering really of the Nordic small and mid-cap community. So what were your overarching impressions with regards to investor sentiment and particularly international investor interest in the Nordic small and mid-cap space?
Yeah, I mean, this is a huge gathering, and again, it was a sort of record number of attendees. I think it was sort of 2,200 people, including the SEB people and including company representatives. Nevertheless, I mean, it was more international investors than before, and outlook, talking to the companies, and I met with medtech companies, I met with mining companies, I met with consumer discretionary companies. Very blended sort of outlook. Some companies still sort of impacted by tariffs, particularly during the first quarter of this year, but so numbers will be distorted by that. But one sector that really stood out, I would say, is sort of consumer discretionary, particularly sort of companies focused towards Sweden.
Right. Yeah, good. And interesting to hear the notable uptake in international guests basically at this conference, which shows that the Nordic region really is making a mark on international radars as well.
Yeah, I think, I mean, international investors are really sort of the marginal investors into the Swedish or the Nordic small cap market, and that's what you need to get sort of really to get share prices going.
And in order to tap into this exciting market, as I mentioned in the beginning, we launched a new fund in August 2025, Isperia Sweden Small Cap, managed by Staffan. Since inception, this fund has already achieved an alpha or overperformance of north of 7%. So congratulations, first of all, on this strong start, and let's hope it continues. Can you just touch upon the key drivers behind the strong start and any particular companies or sectors worth highlighting?
Key drivers, I would say, coming back to the sort of the hangover that we had for 4 years, it's really important to remember that during these 4 years you've had stocks that really have performed very, very well. So by stock picking you can really achieve performance even in a dull market environment. Now looking at the sort of the first 6 months of this fund, I'd say that firstly we are an active fund, so we really trade and we don't hesitate to take profits. Lundbeck, for example, and Himalaya Shipping is 2 examples. There were big positions in the beginning of the fund, and we have sort of trimmed the positions down to very small. We have had focus on consumer discretionary and also a lot of focus on healthcare, where we find a lot of value in the Nordic markets. Yeah.
Great. Thanks, Stefan. We'll get back more to the positioning of the fund a bit later on. So moving over to the fixed income side, I'm happy to welcome also Stefan Pori. Hello, Stefan.
Yeah, hi. Thanks to be here.
Of course. So Stefan is responsible for the fixed income mandates at East Capital Group and also the portfolio manager of our dedicated Nordic fixed income fund, Isperia Nordic Corporate Bond. Given our international audience here today, we're primarily international audience, can you just briefly highlight to our guests what really makes the Nordic region stick out from a fixed income perspective compared to European and US markets?
Yeah, sure. So if you just look at the Nordics, 3 out of 9 countries here are AAA rated by the 3 largest rating agencies. So that's kind of stellar. So the political risk is kind of low. Looking at the banking system, it's constituted of kind of AA rated banks, which makes the kind of environment particular when it comes to company needing capital, because the banking system is normally there and can provide credits. So they used to tap the market in a way to drive return on equity rather than out of necessity. This is special, and it's also good because in a time of stress, normally the banking market can provide additional liquidity to the credit market. And then if you look at the high yield universe, for instance, a large part of the issuers there are unrated, which means we need to do our own homework and assess the credit risk, something we do, and we have both a model and a model on how to kind of invest depending on the credit risk. Also, due to the fact that it is an unrated universe, the company needs to pay a higher spread compared to what you see in the US and in Europe. And the difference is larger than 200 bips currently, so you are getting a stellar premium. And if you look at it on the IG side, you have floating rate notes. So that means that the interest rate risk is very, very low. So you can decide either having kind of a higher yield or a lower risk, depending on where you want to be.
Thanks, Stefan, for that comprehensive run through. I think in particular, at least what stands out to me is this spread premium that you mentioned compared to European and US markets. So you essentially get a higher yield for a similar type of risk level in the Nordics. And also this floating rate note structure, which reduces basically the interest rate risk that you're taking in each investment. So as mentioned, both the investment grade and high yield segments had a strong 2025 in the Nordics. What's your own view of 2025 in terms of market performance and market activity?
I mean, looking at how we are conducting our business here, we are very much focusing on the downside. So what we did was taking down the risk in the fund at the beginning of the year. And then we have a volatility for last year of under 2%. We have a maximum drawdown on 1.6%. And that was when Trump first were talking about tariffs in April, May, I think. And we've been generating a good performance, and we have a good Sharpe ratio. And I think we've kind of navigated the turmoil in a very, very good way last year.
Yeah, absolutely. And as you can see on the slide here in front of you, this just highlights some of the key metrics for the fund. And as Stefan was alluding to, Since we launched this fund in late 22, so more than 3 years ago now, you and the team have delivered a strong performance, but maybe even more importantly, kept the volatility at a good level, which gives this healthy Sharpe ratio, as you can see. I think also worth highlighting is the short interest rate duration here, which again is an illustration of this floating rate note structure of the Nordic market, and together with a healthy coupon there north of 5%. So yeah, anything you would like to highlight in addition, just regarding your fund?
No, but I mean, it's important to understand that the universe in the Nordics looks a little bit different compared to the US and Europe, but all the sectors are there. So you could actually kind of replicate the kind of structure of a European fund in the Nordics if you want to.
Right.
So, yeah.
And also important, just finally to mention, is that it's a crossover fund, this, with both investment grade and high yield notes, where the high yield portion really is seen more as a way to drive alpha more than anything else.
Yes, so we are focusing on the downside. So that's absolutely correct. We only invest in high yields when we think that we will generate a better return, risk-adjusted return doing so.
Right, makes sense. Thanks, Stefan. Moving back to you, Staffan, then. We heard your positive outlook for Nordic small caps, small and mid caps in 2026. And you touched a little bit upon the Nordic consumer returning really here in 2026. But what other pockets of the market do you see as most attractive today?
Yeah, just one thing about the consumer, because particularly in Sweden, I mean, we've had lower taxes now in January. We have a number of things that really will improve the consumers' pockets, really. So that's clearly important. I think that we can find a lot of value in the healthcare sector still. Looking at the mining cycle, still very, very strong. Met with a couple of companies down in Copenhagen, and clearly we've all seen the copper price, etc., gold prices, and that's sort of still underinvested. So from a valuation point of view, you can find a lot of very attractive consumer companies. I would say healthcare companies. It's also from a valuation point of view very interesting.
So consumer, healthcare, and mining.
Yeah,
the three topics.
Yeah, and looking. Yeah.
Very good. And Stefan, if we look into 2026 on the fixed income side, how do you see the market conditions now for Nordic corporate bonds to continue the strong trajectory that they've been on in recent years?
Yeah, I mean, the interest rate or the base rate is lower. That's not necessarily a bad thing. Defaults and bankruptcy will be low this year to come, or we expect them to be low. So you can actually increase kind of the risk in the portfolio without necessarily having any defaults, dragging the performance. So we expect us to continue being overweight in banks. We are still a bit concerned when it comes to the real estate sector. So you will not materially see us increase that sector more than we already have. So I mean, we will stick to our guns and do what we are good at, and we don't try to change the way the portfolio look. In a fast way. Then we need to do that during a longer time.
So despite this lower rate environment, you still see this as creating nice opportunities for the fund in 26?
Yeah, I mean, the running yield is more than 5% currently, and I think that's kind of where you can expect the performance to be. And if you go back, the interest rate was higher, but that was also putting a pressure on the company where we were investing in, and long term that wouldn't be good for them. So I think this is more of a sustainable long-term level that is okay for them and for us.
Lower default risk for the companies.
Yes.
Good. And moving on to the positioning then in the Sweden Small Cap Fund, we heard your sector picks here for 2026. How are you positioning the fund sort of in terms of stock picks and so
I would say very balanced, I would say, because we want to have attractive valuations, we want to have growth, but we don't sort of bet on a great small cap market. So I think that we have a portfolio that will work very well if small caps shine, but it will also perform in a more sort of duller environment. So really sort of balanced risk level. But we have some bold bets, definitely that will sort of make a big impact on the market or on the performance if they succeed. But clearly balanced.
Largest holding in the
largest holding is Swedish medtech company Getinge, but then on the second place we have sort of a really small cap called Alligo, which is basically selling tools, etc., to particularly Swedish and Nordic consumers and professionals.
Yeah, good. And a final question then for both of you. So maybe we'll start with you, Stefan, and round off with Staffan. So if you just had to give one argument for international investors why they should be allocated to Nordic fixed income here for the year ahead, what would that be?
Yeah, it's a good enough potential return. And we have a process where we are looking at looking at the credit risk and assessing it, and then you're getting more paid here compared to Europe, or the rest of Europe and the US. So there is no reasons to not be here.
Yeah, absolutely. Agree. Staffan?
No, I mean, Nordic's long history of entrepreneurship, a lot of owner-driven companies and good growth companies. And looking at sort of last 20-25 years, it's been a fantastic market to be invested in. I think that will definitely be so in the future as well.
Yeah, important to highlight. I mean, on the long-term basis, small caps have significantly outperformed large caps. It's just a small dip here in recent years.
Exactly.
Good. So thank you both. And I think on that optimistic note, we'll round off today's webinar. So thank you all for listening in. And as always, don't hesitate to reach out to myself or any of my colleagues in case of specific questions. And we're always happy to set up individual calls as well to run through our funds in more detail. So thanks a lot.